Welcome back to Data Dash. And for today's video, we will be talking about how much Tesla shares you will be needing to live off of dividends alone. We just went over how many shares you'd need to own before the split in order to retire, but a lot has changed since then, and the company's future is still unclear. Elon will survive. Thus, this works out for the best. Now that Tesla stock is so cheap, we can retire with smaller investment than we would have before. If you want to find out more, keep watching and hit the like and subscribe button. In this video, we'll examine the bear argument, the worst case scenario proposed by longtime Tesla supporter Cathie Wood. We will outline the many positives of Tesla that make the bear case scenario overly pessimistic. AutoZone's revenue is projected to be $372 billion in the bear case, which assumes they will sell 10 million automobiles at an average price of $38,000 each. Incredibly, Tesla's robotaxi services, which are estimated to be valued at $51 billion, are not included in this 10 million roundup. Even more impressive is the fact that the gross margin for electric cars is 46%, up from 28 in Q3 statistics, and will reach an astonishing 50-50 by 2026. The astounding 37% total EBITDA margin indicates productiveness. In Q3, it was just over 23, and experts project it will rise to 37 by 2026. That's completely out of this world. However, we are intrigued by their methodology for calculating enterprise value in 2026. For us, at least, the fact that they can keep going until 2026 is cause for celebration. By 2026, we will have delivered 9.8 million vehicles, and they already know how much debt and cash they will have. This may be going a bit far. Some estimates put the figure at 7 million or higher by 2026. Let's wait and watch how the future unfolds. Cathie estimates that we will make about $250 million with a gross margin of 50%. Explain how the current stock price of $967 is justified by the company's total gross profit after expenses. Woods and ARK's figure only showed enterprise value by EBITDA, neither operating margin or costs. Nonetheless, by 2026, enterprise value will require knowledge of cash and debt. By 2026, Tesla is projected to have a stock market value of $3.3 trillion. If we reach 50 gross margins by 2026, an operating margin of 30 looks reasonable. To sum up, in her bear case, Cathie Wood estimates that the value of her company's stock will increase from its current price of $967 to $4,600 by 2026. After the 3-for-1 equity split, each investor would need $15.30 a share to accumulate the $1.7 million in retirement savings recommended by a recent survey. In the worst situation, would need 1,108 shares of Tesla. To date, 1,108 Tesla shares have been recorded. Given that the current price of a share of Tesla is $123, we would need to invest around $136,400 right now to reach that magical number. Let's examine the market patterns as they currently stand and why we think the bear thesis is overly pessimistic. Tesla has experienced many ups and downs, and the company is currently experiencing a downtrend. With the stock price having decreased numerous times in recent weeks and the stats remaining consistently negative, may now be a good moment to buy Tesla stock and enable some investors to retire with a profit. The future is something Tesla could see. Well, depending on the share's trajectory and Tesla's ability to properly navigate this market, this is undoubtedly a great opportunity to acquire Tesla shares. Assuming we buy Tesla stock now because of its promising future in the market, how many shares we would need to retire by the year 2027? The concern is whether or not Tesla can reach a high price in 2027, after which it is predicted to have a period of drops. But the stock potential suggests that the dips will be minor. Whether or not Tesla is a great stock to buy, the stats suggests that now may be a good moment to invest in the company. Remember that Tesla's success has single-handedly ushered in numerous bull markets, even though several experts thought the company was overpriced at that time. These days, the electric vehicle manufacturer collaborates with other businesses like Lucid Drivian and Neolok, increasing manufacturing and broadening the brand's potential customer base. Extensive research into Tesla's stock performance and the company's potential has led investors to predict a stock price of over $2,500 by 2025. And famous people like Cathie Wood predict a stock price of over $3,500 by 2030. These predictions are based on extensive research into Tesla's stock performance and the company's future potential. Production and delivery of automobiles have skyrocketed over the past 2 years, with the most recent quarterly total of 108,600 units exceeding industry forecasts. Most people look forward to retirement, yet only a minority of retirees put in the effort necessary to ensure they have at least average financial security. If we were to retire in 5 years, how many Tesla shares would we need in our portfolio? Let's do the math to see if investing in a high-value stock with solid growth prospects makes sense. As we discussed previously, a recent poll indicated that the typical retiree requires $1.7 million. Now, let's imagine a little more upbeat future for Tesla than Cathie Wood's pessimistic one above. If the price of a single share of Tesla stock reaches $2,000 in 2027, as this scenario assumes, then we will need to purchase around 850 shares of Tesla stock at this time. At the current Tesla price, this amounts to well over $104,000. And if the electric car manufacturer delivers as promised, the profit potential is enormous. The stock price of Tesla could rise significantly in the future as a result of the company's many fascinating projects. Elon Musk, our CEO, originally envisioned the company's primary mission as being the production of a high-performance vehicle, with the proceeds being used to produce a more affordable vehicle and, eventually, even more affordable vehicles, all while providing zero-emission electric power generation options. Musk has speculated that the humanoid robot project may eventually eclipse the automobile industry and eliminate the necessity for manual labor, both of which would be beneficial to our company due to the resulting cost savings. In the same vein, our Model 2 is a major undertaking that, if successful, has the potential to shake up the field of artificial intelligence and take it to a new level. However, we do keep an eye out for any breaking news. In as short as a few months, our cyber vehicle may be available for purchase. Musk claims that one of our issues was a lack of capacity to produce 4,680 battery cells for the Cybertruck. He also stated productions wouldn't begin until the Texas Gigafactory began making the new model, pushing back the initial 2021 deadline. We Tesla enthusiasts are looking forward to the release of the Cybertruck in 2023, and it's a good thing that the construction on the truck began in 2022. Musk has stated publicly that Tesla will complete development of the Cybertruck by the year's end and have it ready for production in 2023. They've gone public with their plans to develop autonomous taxis, and we expect Tesla's robotaxi to feature some really nice extras. The vehicle will be tailored to serve a variety of functions while providing the highest level of passenger comfort. Not only would Tesla bulls be interested in this, but so would everyone who enjoys keeping up with cutting-edge technological developments. Robocabs could usher in a new era of commercial transportation because of this, and the fact that they are designed to offer unprecedented low transportation costs per mile. Even though clean transportation might benefit from renewable energy sources like solar and wind, our company's CEO Elon realized that the project's high battery requirements would be hard. We will be light years ahead of the competition if we can figure out how to harness renewable energy. Thus, it may be worthwhile to look into purchasing a growth stock like Tesla as a retirement investment for the year 2027. We believe that many individuals can benefit from their services, and they aim to do this by maintaining their arguably established reputation in the industry and their position at the top of the market for the foreseeable future. However, only a minority of individuals actually do what has to be done to make that happen, and even many retirees lack a proper retirement plan. Changes to the rules mean that we can no longer rely on retirement plans like the 401ks and IRAs offered by our employers. The previously approved 4% rule has been damaged by inflation, and our requirements do not decrease despite popular perception to the contrary. However, this is not the case for everyone until we reach retirement age. Therefore, it is crucial to prepare for the future by saving carefully. The number of Tesla shares we will need to retire comfortably can be calculated from our annual expenses. Thank you for watching this video on Data Dash. We hope you found this information helpful in planning for your retirement. Remember to invest wisely and always do your research before making any investment decisions. Now, we want to hear from you. But other than that, thanks again for watching. Make sure to hit the like, subscribe, and bell button for more crypto tips and updates. And we'll see you in our next video.